Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the Vice President of Communications at West Red Lake Gold Mines, a company focused on advancing and developing its flagship Madsen Gold Mine and the associated highly prospective land package in the Red Lake District of Ontario. Gwen Preston, it's great to have you on the show.
Oh, thanks for having me back. It's lovely to see you. Happy New Year.
Yes, Happy New Year to you as well. And I am looking very forward to seeing you in Vancouver coming up in just about a week time. So that's it's coming up fast. I'm very excited for that. Before we dive into West Red Lake, I want to take a step back and look at the macro picture of gold with you at the moment. I wonder, what are the main themes and trends that you're currently watching in the gold space that you think more investors should be paying attention to?
Absolutely. I think the big things in the gold space are first, there's just price strength. I mean, we are at a really lovely gold price. And it's, there isn't weakness in the chart. It isn't maybe shooting to the moon, but there isn't weakness in the chart. It's a strong setup. Secondly, I think, from the North American perspective, this awareness of debt and risk and whatnot, that just keeps rising in the conversation from my perspective. I just think that, whether you support Donald Trump or not, I think everybody largely is aware that the Republicans' ability to reduce spending and therefore reduce this reliance on debt very limited. And so that conversation just keeps coming more and more to the fore. And I think that that's a really important background support for gold that I think will get stronger as the year goes on, because he will get into power and his ability to reduce that, debt reliance will just become more and more apparent. And so gold is always, part of the response when that conversation is up in people's faces. And then the third one that I think is really important is that we've seen the Chinese central bank step in and start buying again in the last few weeks, which is really important. They had just taken a pause, and fair enough. The Chinese have always been price sensitive buyers. They departed from their price sensitivity in the last few years. Maybe in the second half of 2024, they just were like, whoa, we're being really price insensitive. Maybe let's take a pause on our insensitivity. But then 2025 hit and they're like, you know what? We need to continue diversifying our massive US Treasuries holding, our US dollar exposure. We need to continue positioning for this de-dollarized, de-globalized world that has a very different geopolitical, geoeconomic setup than, we've been living in for the last few decades. And so they started buying gold again. And you and I have had the conversation before about how it was the Chinese central bank buying gold that made the gold price, that kept the gold price so strong during the massive rate hike cycle from 2020 through 2021 and 2022. And then it's been Chinese central bank buying has been a huge factor in the price ascent since then. So the fact that they're back in the market, I think, really matters. So I think you put those things together, and I'm positive for gold. I don't see, I never know if there's going to be some explosive event on the horizon, but I think the fundamental support is there.
Well, I would like to pull on that thread regarding gold rising in the face of higher interest rates, because gold generally tends to perform when real interest rates are low or falling and when the dollar is showing weakness. In 2024, we saw gold buck that trend and rise in a higher interest rate environment and alongside a strong dollar as well. Is that solely because of central bank buying? Are there other fundamentals at play? I spoke to David Rosenberg not so long ago. He said the gold market's fundamentally changed. Would you agree with that? How are you viewing that?
I agree completely that the gold market has fundamentally changed. I think that especially the gold market in a rising gold price environment. So a rising gold price historically has always been driven by Western investors who are pointedly diversifying away from something, some sort of geopolitical risk, or more often some sort of economic risk, or they're including gold in some sort of major commodities bull market. It's always been a pointed move into gold from Western investors that's been the force that drives the up in a bull market. But that's not been the case. Western investors are still busy owning the S&P and Nvidia and whatever, all the other things that they're owning. They're not pointedly buying gold. We can see that in the disconnect between gold and gold equities. It's very apparent that Western investors are not particularly interested in gold. They don't dislike it, but they haven't been given that reason to seek it out. So the gold price has been rising for a historically different reason. And it's buying outside of North America. It's all through the Middle East. It's Chinese buying, it's Indian buying. And I think it is fundamentally driven by the shifting geopolitical landscape. So it is a different gold environment. And I think that that's important for everyone to keep sort of forward in their mind as they look at investing, because we can't just rely on historic patterns and assume that those are going to play out the same way, because I do think that the landscape has changed.
So now that we seem to be in a rate cutting cycle with central banks around the world lowering rates, could that be a catalyst for the next leg up in this gold bull market? And as a secondary question, do you think the Fed pays attention to the gold price at all? Because obviously we've heard Jerome Powell call it, when he was comparing Bitcoin to gold, he said they're the same, they're both speculative investments. Is that betraying some deeper knowledge that these people really have, or do they really see gold as a shiny rock?
It's a very good question. I mean, I think the Fed is focused on the things that are directly in its mandate. And I don't think that gold, they're very aware of gold, but I don't think that they make decisions in particular based on gold. I think they are very aware that their decisions impact the yellow rock, but I don't think that that drives what their decisions are. So it's like a one-way street, not a two-way street. As for interest rate cuts and driving gold, for sure, this entire concept of debt and the instability of our spending, the unreliability of our spending coming to the fore, I think that everything that changes now on a large scale in our macroeconomic setup, it sort of feeds into that conversation. So like, are rates being cut because there's economic weakness? Whoa, that just reinforces the reason to maybe hedge some risk because of all of that, those concerns that are bubbling. If interest rates rise, that really makes the debt even less tenable. So that raises the conversation. So it kind of, our bread is buttered on both sides. That's not the best analogy, but that's where my head went to. Maybe I'm hungry, but I think that it's all sort of part and parcel for the thing. I mean, the fact that we're getting this huge gold support from outside of North America or Western investors, that's really important, and it's there. And then the Western angle on gold, harder to pin down these days, but I think that there's lots of reason to believe that it will remain supportive, if not actively supportive. And there's reason for it to maybe get more actively supportive as, risks become a little bit more apparent.
When it comes to the gold mining space, pretty much across the board, we've seen a disconnect between the price of gold and the related equities. I mean, just looking at Barrick and Newmont, their stocks are nowhere near all-time highs. There's been some outliers. Agnico Eagle is one of them that comes to mind. But then especially when we get down to the developers, to the explorers, generally speaking, investors expect these equities to be a levered play on the gold price. And so far, it doesn't appear to be playing out that way. What are your thoughts there? What do you think it will take for that valuation gap to close?
That is the $1 million question for all gold investors, for sure. I think the conversation that we've just had explains why the valuation gap exists. It's because Western investors, who are the ones who buy the equities, aren't particularly interested in gold. Like I said before, they don't dislike it, but they're not being given reason to seek it out. And it's Western investors who buy gold stocks. So all of the support outside of those Western investors that's driving the gold price, those dollars aren't flowing into gold equities, senior, junior, any. What's it going to take for gold equities to get a little love? I mean, at some point, and I mean, this may sound repetitive to some, and it sounds repetitive even as I say it. At some point, the gold price just makes it make sense that you participate in gold equities. I don't know what point that is. I think that the combined thing, which is like the increased conversation and perhaps a little bit increasing reason to add physical or consider physical gold from Western investors over the year, that is what's going to feed into, oh, well, and also the gold price is really strong. So they make sort of financial sense as investments on their own. That marrying, I think, is something that will slowly appear over 2025. But I'm not going to make any, again, predictions on some sort of moment in time or catalyst that's going to suddenly change that disconnect.
Well, let's talk about how West Red Lake Gold Mines fits into the picture. I've spoken to Shane Williams, your CEO, a few times on the program before you joined management. So I have to ask, what was it about the company that made you see enough potential to step up and take a management role?
Absolutely. I mean, in my investing career in junior mining, which is fairly long, I love a good exploration story. You know, I love a discovery, of course, but they're so risky and the odds of success are so low. You know, I looked back at my track record and I realized that the best way that I've banked returns has been with developers turning on new mines. It's this classic golden runway. It's the re-rate as you go from spending money to making money. That has been the most reliable stock pick category in my long mining investment career. And so the fact that I was presented that West Red Lake is exactly that kind of company and is doing that on this really accelerated time frame because bought an asset that was already built, needed work, needed new management, but like didn't face any permitting hurdles, didn't face any huge construction hurdles. Capital requirements relative to building new mines were a lot smaller. I really liked that accelerated golden runway concept. And then I think also, I really have a lot of confidence in the team here. So Shane Williams, I mean, he has built many mines around the world. He was with Eldorado. He built their mines in Turkey and in Greece. He built the Lamaque mine, which is a very similar sort of rebuild turnaround story to the Madsen mine. He's built mines before that as well. He has a really strong record as a mine builder. And then around him, he's built a team of people who know what they're doing. The team here is just really professional, experienced, focused, hardworking. You mentioned Agnico Eagle as a standout in the space. You know, Shane and I, as it turns out in the last few months, we've happened to hear Sean Boyd speak twice. Once was just last week at the Mining Hall of Fame when he was being inducted. It's impossible, first of all, to listen to Sean Boyd and not be sort of motivated to build a better company. But Sean really emphasizes people and focusing on good people and on just working harder than everybody else. And I mean, I think that is one of the characteristics of our team. We work incredibly hard, long hours. Let's get this thing done. So that combination of a really hardworking team and an investment thesis that I really believed in. There's a lot of details about the Madsen backstory that feed into my belief that we can get into, but that's the combination that really pulled me over.
Well, let's talk about the economics of the project because you recently announced positive pre-feasibility study results for the Madsen gold mine. Could you walk us through those results and what they mean for the company?
Absolutely. Okay, so we put out this pre-feasibility study. This is for a mine that we are going to turn on in the next 6 months. So it's a pre-feasibility study plus, shall I say, because it's based in real costs. We've been underground blasting, mining, making tunnels, drilling for 16 months. So we didn't have to estimate any costs on our operating side. Also, the whole thing's built already, so we didn't have to estimate or leave aside any engineering questions because it's all in place. So it really is a well informed pre-feasibility study. And it's the study that we will operate on. Now, the caveat to that is it's a very conservative study. You know, these sorts of studies have to be done by independent consultants. We worked with SRK, and they required us to use a reserve cutoff price. So the gold price that was used to determine which of our resources was economically viable to mine, that price was $1,680 US. So like $1,000 less than the current gold price. A very conservative gold price was used in determining which of our ounces were economic. So I think the two conclusions that leads to are, first, even though it was this really conservative approach to how we can mine the ounces that we know exist at Madsen, it still generated positive, strong economics, $315 million post-tax NPV, a 255% after-tax internal rate of return because that investment is largely done. The investment that's remaining is very modest. $70 million Canadian of annual average free cash flow. Great numbers. Short mine life. And some people would suggest that the all-in sustaining cost is on the higher side at $1,680. It's funny how that's the same as the reserve cutoff price. They happen to be the same number. But anyways, $1,680 US is our all-in sustaining cost per ounce. So the things of the PFS that people question are that short mine life and the on the upper end of the range for all-in sustaining cost. But those things really were driven by that really conservative approach. So if you use a more practical gold price to cut off here to determine what's economic, well, you end up mining slightly wider areas. That means that you can do more long hole stoping instead of cut and fill. So you can have lower mining costs. So that's probably going to reduce your all-in sustaining cost. It means you're going to mine more tons. Your grade might be a little bit lower because you're including some of this halo, but you're going to mine more tons. You're going to produce at least as many, if not more ounces. The plan also limited us to 800 tons per day. The mill can go to 1,100 very easily. There's lots of the reserve left out 1.1 million indicated ounces that are all in and around the reserve that it did define. And we certainly believe that a practical use of a higher gold price or sort of a lower cutoff grade, whichever way, those are the same things said different ways, means that a lot more of those ounces will be mined. So that means that we won't have to do as much access development to get to this bit of the reserve and this bit of the reserve because some of the stuff along the way is actually economic. We won't have to develop the second shaft that's over to the east that gets us down to Madsen Deep as early in the mine plan, because there's a whole bunch more that's right here that we will actually mine. So the PFS gave good numbers that justifies the restart now based on this conservative approach, strong economics for that. And the upside isn't just like an arm wave down the road possibility. I mean, it's right here. It's right now. The internal mine plan that we have for the next 15 months of operation is all long hole. It's none of the cut and fill that the study assumed would be 60% of the mining. It's actually all long hole, and we are very comfortable with the fact that we are going to mine significantly more of our indicated resource than is captured in this pre-feasibility study reserve. So that was a lot to sort of spew out all in one go.
No, that was a great breakdown. And you mentioned that there were some more details regarding the Madsen Mine that give you confidence in the project, its past history, etc. Why don't we get into that? And then also if we could segue that into future plans, because I know that there are plans to restart the Madsen Mine this year. So if you could kind of start with the background, those details you wanted to discuss, and provide us with a timeline and the steps required to bring the mine online this year.
Absolutely. So I think the things that gave me confidence that West Red Lake Gold is going to be able to restart the Madsen Mine successfully when, of course, the prior operator stumbled and the asset went into care and maintenance just over 2 years ago. Really, that came down to an understanding of the mistakes that were made and the realization that those are fixable mistakes. So key amongst that is the intensity of drilling. So the prior operator did a lot of good drilling to define the resource, and then they essentially stopped drilling and they did not definition drill. They didn't increase the accuracy of the resource model before mining. They mined the entire resource envelope. That's not sufficient in these Red Lake systems. The biggest challenge in Red Lake, in high grade underground narrow vein gold mines, which is what this is in Red Lake, is that it's not nicely, the gold isn't just nicely spread through the sort of resource envelope. It's like a chunk here and a chunk here, and those are very high grade pods, and then there may be a little sparse area in the middle, and then it blows out over here and then it gets vacant for a while. You got to do tight drilling to understand where the gold is so you can mine the gold and not mine the unmineralized rock. So understanding that difference of approach and seeing the results come in as we do that. So we've done 58,000 meters of definition drilling to flesh out that 15-month mine plan. We have more than the 15 months, but that's the number that we have in the mine plan. We're seeing great numbers, grade numbers in there because we're able to define those lenses and target those lenses as we mine. So understanding that there was approach in how to understand where the gold is, how to mine the gold. Some of the mining methods they used were not sufficiently targeted. Those things were fixable. And then on the operational side of things, understanding that some of the choices that were made just about how to run the mine made things really inefficient. We could talk all day about sort of some of the examples of that. They built it on a constrained budget, which means that capital projects that would have really helped weren't done. That meant that operating costs were higher and things were less efficient. And so West Red Lake's approach has been to do all of those things before to set ourselves up for efficient operations. So we think that our infill drilling and our approach to mining is going to mean that we can mine the grade and tonnage that we say. And we think that the capital projects mean that we're going to be able to do it at the cost that we say. That's mine. That's how you do a successful mine. On that grade and tonnage thing, we are currently, and this leads into the timeline thing. So now the PFS is out. We have the money, all the money that we need to get this thing back into production. We are currently mining because we are stockpiling bulk sample on the surface. That's going to be from like 4 stopes in 2 parts of the resource. And so we are going to turn on the mill in late February, pack it out with some low grade stuff, and then we're going to run those bulk samples through the mill in March. And then we're going to be able to produce reconciliation numbers. We think we expected this stope to grade X and have Y tons. What did it actually have? That news release should be an important event in the life of West Red Lake Gold, because if the prior operator was unable to do exactly that, if we can demonstrate that we can do that, that really underpins the entire thesis. So that's the near term. Mine the bulk sample, stockpile it on surface. Once the bulk sample's done, the crews will transition into production mining. They'll develop a 10,000 ton stockpile on surface. And then once the mill has done the bulk sample, depending on if there's things that need to be addressed through that learning curve, we plan to roll into just production by like a June type timeframe. We're not going to blare trumpets and say we're producing. We're just going to start doing it, because that's sort of been our approach to things in general, and then ramp up in the second half of the year, so that sometime close to the end of the year, we're getting at that commercial production level. So, I mean, we want to be able to announce first gold in the middle of this year. It's really not very far away.
Fantastic. Well, Gwen, this has been a great conversation. I'm going to put a link in the description below to the West Red Lake Gold Mines website, as well as social media for people who want to follow the company. Thank you so much for coming on the show and sharing your knowledge with the audience, and looking forward to seeing you at the VRIC.
Likewise. Let's catch up at VRIC. Great to see you, and thanks everyone for watching.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.